Today, we will talk about the fintech disruptor SoFi and give you 5 reasons why we think it has enormous future potential. Now, remember that this is our personal opinion and it's essential that you do your research and make your own decisions that fit your portfolio and specific needs. So now, let's get our bullish thesis on this particular stock. The first reason why SoFi has potential is because of their business strength. SoFi is a comprehensive personal finance platform that helps you manage your finances in one place. They offer various services like checking and savings account, credit cards, stock and cryptocurrency investments, loans, and insurance. And the best part, it's all on one easy-to-use app. Their competitive rates have made them famous, and their user base has grown rapidly from less than 1 million in 2019 to over 5 million in the past year. As a result, SoFi is a fintech disruptor that we believe will continue to thrive in the future. As we look at the financial services industry, we see that it's massive with a total market size of over $22 trillion, and the fintech sector is continuously disrupting and taking a larger piece of that pie. This is precisely why SoFi estimates that their addressable market is already worth at least $2 trillion today, around 400 times larger than all the sales they did last year. It's also why they've grown their sales by such large amount yearly, even in the disastrous 2020. They managed to grow their revenue by almost 30%, and they still put over 70% growth in 2021 and over 50% in 2022 despite the government freezing student loan repayments and discussing canceling them. This doesn't directly affect SoFi, but it still hurts them because fewer people choose to refinance their student loans if they think they might be cancelled or paused, and that used to be their most significant revenue stream, so they were heavily exposed to it. Nevertheless, their ability to continue growing at such high rates is incredible. Unfortunately, moving forward, growth is falling around 30% given the current macroeconomic conditions and the continued pause on student loans being much longer than anticipated. But this leads us to reason number 2, which is how incredibly well-diverse they become to ensure they can keep growing at high rates regardless of the market conditions. The management team has made several brilliant moves, including acquiring an actual bank to give them official bank status, which allowed them to make specific structural changes to their business to improve profitability. They also acquired Galileo, a fintech company that not only allowed them to integrate Galileo's advanced APIs and technology into their own mobile platform to enhance their products even further, but it also gave them access to over 130 million user accounts on Galileo that they can now target with all their own products and services. This creates tremendous synergies across the entire ecosystem, helping them diversify away from just student loans. In 2020, SoFi's lending segments, including student loans, made up a significant 83% of their business. However, today that number has decreased to 60s. Their technology platform has also increased 20%, and the financial services segment has grown to 11%, which is quite impressive. Despite the lending segment's growth of over 100% from $500 million to over $1 billion, they have been growing other parts of their business at an even faster rate, thus decreasing their dependence on the lending segments. Regarding the student loan turmoil, SoFi's business is only temporarily affected since their clients who refinance with SoFi no longer qualify for debt forgiveness. Therefore, once repayments start, people will want to refinance their student loans again, and there will always be a business here for SoFi to tap into. Despite all the positives, the stock has fallen by over 77%, which brings us to reason number 3, the falling stock price and valuation. While a falling stock price alone does not necessarily make the stock a buy, it does indicate that we know the heights SoFi has reached in the past despite being a much larger company today. We will discuss profitability in the next segment. By now, you've learned about some of the compelling reasons why SoFi stock is poised to skyrocket in the future. But don't tune out just yet, because we're about to reveal the top 2 reasons that could make all the difference. So if you want to be ahead of the curve and potentially reap the rewards of SoFi's success, stick around for the rest of the video. And if you're already convinced and want to take action now, let us know in the comments. Now, let's get down to our last 2 reasons. Number 4 on our list of reasons to consider investing in SoFi is that the recent drop in stock price has made the company's valuation more affordable. The price-to-sale ratio has fallen from nearly 10 to just about 3, which is significantly more expensive than the sector. This is a good deal for such a high-growth speculative stock. Moreover, SoFi is expected to focus on more than just sale this year, as management predicts they will become GAAP profitable. Although the company currently loses money, many of those losses are due to stock-based compensation, which will gradually dissipate over the coming year. By the end of 2023, management feels that they will finally break the GAAP profitability, which analysts agree with, estimating a 178% average annual growth in earnings per share over the next 5 years. SoFi has already achieved profitability on an adjusted basis, and it's only a matter of time before they reach standard profitability. This should reflect heavily in the stock price, and ultimately brings us to reason number 5, SoFi's incredible resiliency. As we've mentioned, their growth may slow down over the next couple of years. However, it's important to note that they've already experienced significant growth, making future comparisons challenging. Additionally, we're currently in a time of economic uncertainty, with many predicting a recession. Despite this, SoFi has been performing quite well, which is impressive. If they're able to turn a profit this year, it would be the icing on the cake. SoFi is a strong buy as a high-risk speculative stock from this standpoint. If we do go into recession, finance-related stocks like SoFi will likely be hit hard. This is why the stock is trading at a relatively low price. We suggest buying it in small amounts for the long term. If the stock continues to crash or we enter a recession, we can purchase more and lower our cost. Ultimately, we believe that the economy and the stock market will recover in the long run, and SoFi can be the high flyer once again, just like it was in the past. Of course, this is our opinion, and we encourage you to make your own decisions. Let us know in a comment what you think about SoFi. Do you agree with our thesis, or are you bearish on it? We're open to a conversation about it. Thanks for joining us. This has been Jules, and we'll see you in the following video. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here. Want to see more if SoFi stock is a good investment? Check it here.